can Israel afford to continue its current policies in Gaza while its debt to GDP ratio rises, inflation remains, and consumer and business confidence are collapsing?
You are right. In fact, with this question, figures that I have here in front of me, they show that really, in fact, the fiscal deficit of the Israeli government is something like around 7% of the GDP. Maybe for the audience, it's not important, this number, but in fact, it's a huge number. We know that the international standard is less than 3%. So they are at 7%, which is a huge number. Also related to the debt to GDP, we know that at the beginning of the war in 2023, it was 62% from the GDP. At the end of 2025, we are expecting 69%, which means that they have to watch really their debt to GDP. Otherwise, they will have a huge problems related to the rating, related to the financing of the international markets, and at many levels. So they have really some challenges related to this. The Bank of Israel estimated the occupying all the Gaza will be something like, the cost will be something like $55 billion. So it's a huge related to the, it's something like around 10% of the GDP of Israel. So it's a huge cost. I don't think that Israel is able to continue at this level. And more specifically, the responsible there, they know already that they will face isolation and more isolation from the international community at this level, since that the methods that they are using on the ground, they are violent methods. They are not, in fact, adequate with the civilians. So that's why I don't think so. They have really challenges related to the stabilization of at the macroeconomic level of their economy. Are they able, in fact, to master their fiscal deficit? It's something very important. More specifically, if they want to re-stimulate their economy, they have to lower their taxes, they have to lower their interest rates to allow the financing of the companies. So they have really huge challenges at this level. I think that they have already complications and complex situation that I think that it's a major weight in their decision if they continue what they are doing in Gaza or not. Unless, of course, if they have the support of US in this case, maybe things will change at the analysis level.
Well, is Israel's pivot to the US or non-Western markets a viable economic strategy or a desperate attempt to compensate for the loss of trade and investment from traditional allies? And more importantly, do you think that strategy would actually work?
In fact, we know that, as you mentioned it in your reports right now at the beginning of this interview, we know that some the European markets, something like 30%, and also in the United States, they have a big part. But the high-tech sector in Israel, in fact, is covering, in fact, a global at the global level, if you want, covering many countries around the world. Now, what is the response of these countries related to Israel and what it's done in Gaza? I know that from the voting in the United Nations, the last voting where many countries voted with a resolution related to the stopping of the war in Gaza, there is a trend, in fact, to stop working or stop trading with Israel. But the question related to the high sector, and more specifically the military side from this high tech sector, I think that many countries will still work with Israel. Will they gain financing from, or will they bring investment from these countries? I don't think so, because many countries has financial difficulties. I think international markets is the best place to finance their high tech sector, which is the engine of their economy. So they should stop really the war. And after that, we can talk about a strategy related to the stimulation of the economy again. Without stopping the war in Gaza, it's impossible. It's like, in fact, we are turning in a closed circle. It's not possible, really. Huh?